What's up? What's up? What's up, y'all? This is the the final final day of monk mode. My monk mode version of the Thanksgiving version in the country. Just enjoying the peace, the tranquility. Oh man, just getting some good walking in, walking backwards, walking forwards, just getting it all in. So I was listening to something, and it was saying everybody deserves to be a millionaire, and they say over the course of your lifetime, $1 million, over $1 million goes through your fingers in your spending, in the wages that you've earned, in hopefully you've been investing. So over the course of your lifetime, you've touched somehow, some way, $1 million, over $1 million, but you just haven't found a way to keep it or keep much of it. And most importantly, you haven't found a way, or an effective way, a truly effective way on how to multiply it. How to multiply it to its greatest extent, reasonably. Because you can go beyond that greatest extent reasonably, but that's going to cost more risk. It will get you greater returns, but that's not what I'm talking about. Because I done seen a lot over my journey as far as getting returns. I've experienced a lot over my journey as far as getting returns. Whether you operating in the basic state of just a regular savings account, or you're moving from a savings account to a money market account, and then you're moving up from a money market account up to a CD, and then you're starting to move up from different levels of CDs based on time periods, whether you're going from a 6-month CD to a 12-month CD to maybe a 24-month CD. Now, I believe they may have even a 36-month CD. I don't do CDs, but I've seen a lot over my journey, and 36-month CD could be out there. I don't know. I don't own CDs. Matter of fact, I never own CDs because why? I wanted my money to grow. Okay, but people who want some type of stability, some type of guaranteed return, then they'll put the money in there, and that's cool. But you want to always look to the next level. Where can I get a greater return? And that greater return, yeah, it's going to cost me a little more risk. But the question you forget to ask yourself, how much more risk? Now, you start to move out of your CDs, and now you start to look at, maybe some bonds. They got different types of bonds, and I've never owned bonds. It doesn't fit into my investment style. Everybody's going to have their investment style and their investment risk. And when I started my journey as a young person, I'm here for growth. Growth and returns. Growth and returns, which means I can't be looking at stuff that's going to be giving me a guaranteed rate of return. So you start looking at the stock market. And even on the stock market, you got your different levels there. You got your ETFs, and you got different levels of ETFs, which are exchange traded funds, which operate on a, how can I say, a cheaper version of a mutual fund without the fees, and it gives you the flexibility to be able to sell it in the middle of the day if you wanted to, versus a mutual fund where you have to wait until the end of the day. And I'm not gonna go too deep into all the intricate details about it and turn this into a doggone boot camp class, but I'm just dropping some knowledge, then hopefully that you can take and go and do your own research, and then just elevate yourself, elevate your mindset to go to your next level. And then once you get your feet wet with your ETF, then you got to choose what type you want. Do you want to be conservative? Do you want large cap growth? Do you want international? I don't mess around with international. And I'm going to tell you why. You know, a lot of the large companies that you can invest in with our large cap growth ETF, those large companies invest internationally. So if they invest internationally, why would I need to go out and get an international fund? Let the companies do the moving for you. Let them do the moving and shaking for you. Let them do the deal making for you. Does it make sense? Does it make sense? So a lot of people will go into their retirement plan at work, whether it's a 401k, 403b, TSP, and all those other ABCs out there. I don't know them all because I'm not a financial advisor. Fuck around me, you lose some goddamn money. That's my goddamn disclaimer to you. So I'm just saying. Don't just listen to me on here now. I'm just talking shit. I'm just talking. This is for entertainment purposes only. I'm a guy on a doggone dirt road talking trash. So you're not in my office, me sitting behind a mahogany desk with all my credentials on the wall. Motherfucker, I ain't got no goddamn credentials. Shit. But I got years of experience. I got decades of experience. Yeah. And that shit rings, circles around those credentials. Because that's my measuring stick. Yeah. Performance. Credentials don't mean shit. That just means that you're able to bring in somebody as a customer to help guide them. I ain't looking for customers. I'm my biggest goddamn customer. And for some reason, the people I do talk to about this financial stuff, they're looking for somebody who can spit the game the way they see it, the way that it's relevant to them. And I still give them that same old disclaimer. And it is what it is. Because my game, my goal is just for you to grow and tap into the information and be able to serve yourself. Because nobody's going to take care of you financially better than you will. You have to be your own advocate. All the information is there. The internet is there. The ultimate equalizer, the internet. But we are using the internet for bullshit. Ah, man. So where did I leave off at? So yeah, so the options you got with your 401k, your TSP, your 403b, and all those employer-based retirement plans. You got conservative, which would be a mix of bonds and some stock. You'll have target-based funds. I don't believe in target-based funds either, because it's going to have a mixture of bonds, stocks, and international, and the goal of it is to automatically adjust as you get closer to your retirement. But the fact of the matter is, if you are a young person and you got a target-based retirement plan, you're gonna have bonds in there, and you don't want your money invested in bonds. You want your money invested in growth, especially at the most important time of your life when you're young. So when you're young, go into large cap growth investment options with your retirement plan at work. When you're young, make sure your employer has a Roth type of investment plan, because that means your growth and what you put in grows tax free. And make sure you're putting at least 10% of your income, and your employer should have some type of matching, and you go from there. And once you get that in, now you want to do a Roth IRA, which is separate from your employer. Again, I hope you see the theme here. We're going after tax-free growth, tax-free contributions, so that when we get to retirement, all the funds that we're pulling out is going to be tax-free. Not only that, by investing the funds inside of a Roth IRA away from your employer, that's funds that you can tap into. Not that I recommend it, because some people tap into their funds for the wrong reasons, but you can tap into it for the right reasons to purchase an investment of some sort, to make a down payment on that investment of some sort. And I'm keeping this vague. I'm really keeping this vague, there's many types of investments out there, and I can talk about this because I've done this. Utilize my own money to tap into other investments. Y'all are out here chasing these insurance products, and you haven't even done the basics of investing. And I'm not going to name all the insurance products out there, but there's a bunch of insurance products out there that people are talking about now that you can borrow from, or cash value and all that shit. If you just invest properly, you become your own bank that way, without having the high fees of that insurance product. They don't talk to you about that, right? Without having the high cost of that insurance product. Yeah. Okay. So once you get your Roth IRA, and you do the same thing with your Roth IRA that you did with your employer-based retirement plan. You go out and invest in growth. Now, with your Roth IRA, you're going to have options. That's the whole key to money, to building wealth, to finances, and managing it appropriately. The whole reason is for options. It ain't the money. They done brainwashed you, afraid of money. And I'm not gonna go into the ways of how you've been brainwashed, but it's a tool to give you options in life that you didn't have before. That's all. That's it. Not only that, it allows you to make other investments that you couldn't before. To do what? Grow more money, grow more wealth, grow to the point. Here we go now. Listen to me. To the point of liquidity. We want liquidity. We want cash flow. We want cash flow and liquidity. Man, let me know if they talk to you about that at school. Let me know. Let me know if they talk to you about that in school. At any level. High school, college. Shit. Spend enough money for college and they ain't give you that. They ain't tell you to go after cash flow. They ain't tell you to go after liquidity and all that money you spent for college. Shit. Ah, man. And a little country motherfucker on dirt road. He's gonna drop it on you. But it's alright, man. Ah, man. So where was I? Got sidetracked a little bit. But we're gonna come back around to cash flow and liquidity. So with your Roth IRA, you're gonna be able to invest in other things that you can't invest with your employer-based retirement plan. So now you can invest in individual stocks. Now you can invest in real estate through real estate investment trust, which is called REITs. REITs, REITs. All right. So that gives you some real estate exposure without being a landlord. Let the big conglomerates manage the property for you. Let the big conglomerates build the portfolio for you. Let the big conglomerates have single-family homes, multi-family homes, storage units. Yes, storage units are part of real estate. And for some reason, y'all got storage units and constantly paying for these motherfuckers. And you ain't got no junk in there. Make it make sense. Now, some of you got storage units and you got stuff of value in there. All right, cool. But majority of America, you ain't got no junk in there. Just empty out the storage unit and stop paying. So I digress. So inside of REITs, you got storage units, you got commercial real estate. You also got you have some with some farmland in there. You'll have some with just some vacant land. Now just imagine that in the portfolio, vacant land. But guess what? You got people who did the research on that vacant land, and they are projecting that one day down the road, who knows when, nobody can predict the future in anything in financial. Past performance does not guarantee future results. But that vacant land will one day become occupied. Start building on it. And guess what? Value goes up. Guess what? Your value and how much of that real estate investment trust that you own goes up. And also, guess what? Here we go now. Y'all still with me? I don't know why. Shit. I wouldn't be listening to some country motherfucker on a goddamn dirt road talking finances. Man, please. Anyway, but real estate investment trust pays off quarterly dividends, which we're getting around to cash flow. We're getting around to the cash flow. Matter of fact, we're coming around the corner. We're coming around the corner to cash flow. But so yeah, your REITs paying you quarterly dividends, and if you're at a certain point in your life, you don't need those quarterly dividends to live on. So what do? You reinvest it. You reinvest the quarterly dividends, which gives you a larger portfolio balance for that portion of your portfolio. Now, so we went from individual stocks inside of your Roth IRA to REITs inside of your Roth IRA to give you real estate exposure. And not only that you can have, and I'm coming back to the individual stock, but you can get ETFs inside of your Roth IRA. Again, exchange traded funds, and you can get one that's purely technology. And if you don't believe technology is going anywhere, hell, you're watching me on technology. So you get you a technology ETF that's purely technology, and you don't have to worry about picking the individual stocks like Applesauce. What did I say? Did I just merge Apple and Microsoft together and say applesauce? So you don't have to worry about picking the individual companies like Microsoft and Apple or Meta, which has Facebook, WhatsApp, Instagram, all up under their umbrella. We've probably got some other small companies up under their umbrella as they continue to buy other companies. You got Nvidia, you got just a lot of individual companies. And then if you start to come down from the technology, think about the companies that you do business with, that you spend money with each and every week. Some of you shop at Walmart each and every week, sometimes maybe multiple times a week. And trying to tell me you do not own any of that stock? Make it make sense, man. Make it make sense. Walmart pays a dividend. Walmart grows. Go and look at the chart. Now, I'm not that type of person who's going to throw up charts and say, look at the 1 year performance, 2 year performance, 5 years performance. I want to encourage you to do that yourself. Look at the 10-year performance. Amazon. Shoot, you shop at Amazon multiple times a week, probably. Maybe at least once a month, probably. And you trying to tell me you don't own any of Amazon stock? You trying to tell me you don't know how much money Amazon makes a year or a quarter? Dive into that type of stuff. Especially if you're going to be spending money with these companies, become an owner. Become an owner. You got Verizon, a great cell phone company, overpriced for me. Overpriced for me. But some of y'all pay that. Which means you pay that bill month after month after month, but you don't invest in that stock. They pay dividends. You don't invest in that stock to get back some dividends? Ah, man. What chili I have. So, and keep in mind now, listen to me. I may be bringing up these companies and talking about these companies. This does not mean you go and invest in them because I'm saying it. Do your research. Go and talk to a financial advisor. because I am not one. Don't want to be one. And if I was one, you wouldn't be able to afford me. And I stand 10 toes down on that. So, go and talk to a financial advisor who will have your best interest at heart, and will talk to you from a teaching standpoint to help you learn, who will help you understand, to most importantly, and this is the almighty goal, most importantly for you to be able to bring this information, or the information that they relate to you as you go about your journey. Take that information and instill it in your kids. Your kids. That's who I want to reach. That's who I want to reach. All right. As I make this video, I just got a message that individual stock that I'm investing in is on the rise. And only getting to this portion in my life to where I can actually start to trade individual stocks. Trading, and I'm going to say this now, trading, and I'm going to say this again, trading is risky. It is risky. And so many people are trying to jump straight into it, skipping over the basics of everything I just talked about. And they're trying to jump to trading. Build your foundation first. Build your foundation. And once you got your foundation, then and only then, later on in life, because it's not going anywhere. The financial market is not going anywhere. So that trade is on. I'm gonna cut off the video here soon, so I can go ahead and make the move I need to make on that trade, and close it out, and be done with it. And then I move on to the next trade. But trading is risky, and it's something that you only want to have a small portion of your portfolio. Again, money that you are willing to risk. Everything in investing should be what you are willing to risk. It's getting cold out here. My words ain't coming the way I want them to come. But investing is risky, and should be only money that you are willing to lose, and you're willing to risk that. But at the same time, one of the greatest wealth building vehicles there is, you do not have to take a lot of risks to build wealth. You just need to give yourself time, which means that you can stay in the middle as far as the risk portion by investing in profitable individual companies, growth ETFs, and in that growth ETFs, majority of the companies that they will have in there will be profitable, and the ones that are not profitable or continuously to not perform, they'll move them out of the portfolio, which means you don't have to worry about it. Now, with the ETF, you may not get the great returns that you can get by owning an individual company like Apple, Microsoft, Amazon, Walmart. You may not get all of their returns, even though they will be mixed in to the ETF, but you just have a small portion. So, where was I at? Yeah, so once you got your Roth IRA, and if you're self-employed, there are, oh man, can't think right now because I'm not a business owner, and I'm keeping myself from starting one because I'm happy being an investor. But maybe one day I will become an investor, and I will become a business owner to tap into some of the things that are available on that side as far as retirement planning. I believe it's called the solo 401k or the SEP that are available for self-employed people. But bottom line, man, just go to Google. Jesus Christ. Just go to Google and find out what type of retirement plans are available for self-employed people. Because don't be out here being self-employed and you don't have a retirement plan set up for you. It's not hard. It's not hard. Man. Because bottom line is, self-employed, you don't want to be working forever. You want to have something that you created for your future. And you create your self-employment retirement plan, you'll have the same investment vehicles that you have with the Roth IRA. Being self-employed, you'll have higher contribution limits, which is one of the reasons why I say I may become a business owner down in the future. I get rid of my job. I leave my job. I create the cash flow I need. I create the liquidity I need. That means I don't need a job anymore. All right, so where were we? Where were we? Oh, the big elephant that's in the room. So once you get to that point where you're investing in individual stocks, you're investing in your REITs, and then you decide that you want some actual physical real estate, you may want to add that to your portfolio. Everybody doesn't have to have real estate in their portfolio, even though there are people who have built majority or all of their wealth through real estate, and they don't want to have anything to do with individual stocks. That's them. That's their risk tolerance. That's their investment style. What you need to do is look at people and build your own lifestyle, build your own risk portfolio, build what fits you. You're just looking to other people for ideas, for hopes, for inspiration. And then you take it all and mix it up, and then you produce your own product. You produce your own style. Your own style that can hopefully go from generation to generation, because you pass down knowledge. You pass down tangible knowledge instead of passing down bullshit, instead of passing down fear. That's in fact that part. Passing down fear on money, man. Oh my God. They say in the Bible there are more scripture about wealth building than anything. Now, I'm not a Bible thumping person or a church going person, but I do wake up, get my morning spiritual going. But if there are more scriptures about wealth in the Bible, why aren't those scriptures shared with the congregation? Why aren't people who are on their own solo journey on sharing the gospel their own way that they share the gospel as an individual, why aren't they sharing that part of the Bible? Why aren't they preaching God's word on wealth if they're an individual on an individual journey. So those are things I question. God wants his people to be wealthy. And if what they say is true, over half of the Bible talks about wealth. And the people who are spreading the word should be spreading that word, a little more of it. I'm just saying. All right, I digress. So once you go into deciding if you want physical real estate, then you start to move up towards precious metals. I personally don't deal with precious metal. Some people enjoy precious metal as a security, as a hedge against inflation, against the dollar losing value, because precious metals hold value. Some of them. But precious metals go up and go down just like anything else. They go up and go down just like anything else. So again, you do not want to have all of your assets in precious metals. I don't do precious metals. And I'm going to leave it at that. Never have, never will. The little bit of gold I did have, there was a time when the price of gold was spiking, and I sold all my gold. I really not a big jewelry person anyway, and that was an opportunity for me to sell it at a high price, and shit, got a great price for it. So, but if you're a person who wants gold in your portfolio, then have some gold, silver, precious metals, period, in your portfolio. Now the question is, where are you going to store it? Are you going to store it in bars, at your house, in your safe, whatever, safe deposit box, at a bank, whatever? But you have to question yourself, how are you going to store your gold? Or they have ETFs for it, which means you can just invest in precious metals like an ETF, and you can have a precious metal portfolio that has a mixture of gold, silver, and some other precious metal in there. Get some copper in there, but now you don't have to worry about storing it. And then as we move further up, we got cryptocurrency. So you can own some cryptocurrency. And then the question is, now we're talking about a risk. We're moving further up the risk meter. Just like everything else, there is risk. But with risk comes rewards. And it depends on how long you've been investing in your cryptocurrency. And this is the most important part. And you did not sell out of fear, because maybe you didn't know what you were doing from the very beginning. That part. Then you would have reaped some great rewards. Now, as you watch with cryptocurrencies, there's a lot of them out there. There's a lot of them that have disappeared because they were worthless from the very beginning. which means that people probably should not have been investing in it with money that they can't afford to lose. Again, we go back to our rules of investing. Don't risk more than we can afford to lose, especially as we start to move up the risk meter. So you're going into cryptocurrency, it better be money that you can afford to lose. And just like stocks, you want to stick with ones that are popular, ones that are in the top 10 ranking on CoinMarketCap. You can go with some that are not ranked yet, not listed on an exchange yet, but are going to be listed on an exchange, and they have a white paper that you read about, and the white paper just pretty much gives the details and their roadmap and their journey and what their plans are. So if you read that and it's something that resonates, that resonates with you, that you want to invest in, then just make sure it's money that you can afford to lose. Risk money. That way, if things don't work out as planned, oh well, it's just risk money. And if things do work out as planned, then guess what? Oh well. See, I stay steady Eddie in this investing thing. I don't get too high. I don't get too low. I'm just like steady Eddie, baby. And when things work out the way I want, oh well. Because I came into it with a risk mindset that suited me. Even though everything that goes on in the world around me could easily get me distracted and pull me in a different direction to make me do something that I should not do, or make me go in a different direction that goes against my investing thesis, then I just become like everyone else, moving with emotions, moving at the whims. And you got to realize this world that we live in, with this 24-hour news cycle, things go quickly. Shit goes quickly. Information goes quickly, and it's quickly reacted upon, and it'll quickly throw you off your game. So that's the biggest thing about investing at any level, any risk level. It's controlling your emotions, controlling who you allow to feed you information, controlling the information that you consume. Man, come on. The information is in your hands. You control what you receive. You control what you take in. But you're just consuming. You're consuming too much BS. And it throws you off your game. It throws you off your goal. And you're not getting the results that you desire. Whether they are short term or long term. Because when I talked about cryptocurrency in 2017, people had jokes, whether it was whether it was people that was like in a circle, or whether it's people where I get information from, because I have different news sources that I utilize. And in that circle, sometimes you wonder, why are people there? Some people are in circles just to be that pessimistic person. It's like, why the fuck are you even here? It's like, why? And it's like, right now, with me making this video, I don't care what anybody does with this video. I hope they get something from it. And I'll be honest with you, I don't even know if I'm going to post it, because like I said, I'm just operating my version of monk mode here in the country, and I'm just doing a brain dump. And I haven't looked up to see how long this has gone, but I'm about at the end of talking, because I've taken you on what I believe is the risk barometer from conservative investing all the way up to the most risky thing we have right now is the cryptocurrency. Well, this is what I'm about to say. So when you get a chance to, as me, to be able to front run government, to front run large institutions, to front run majority of the retail market, that does not happen often. So sometimes you have to take a chance and take a risk that fits you to be able to do that. And then now go from 2017 to here we are now. And now you have products, investment products being created around cryptocurrency. Now you have investment products being and are created. Matter of fact, they are already, I'm gonna take that back. They're already created and on the market for retail investors, being offered from financial institutions, which gives some form of legitimacy to the product. Again, you have to look at it as risky. And these large ETFs, these large financial institutions are offering to their wealthy clients. They're probably talking to their retail clients also. They're probably mostly in the ears of their wealthy clients. And if their retail clients just come to them asking for the product or looking to purchase the product on their own, they'll just have it there available for them. But with their wealthy and ultra wealthy clients, they reach out to them because they're on a wealth management model. And they'll reach out to them and say, hey, we can now offer this cryptocurrency ETF. And as your wealth manager, I believe a certain percentage of your portfolio needs to be in this to grow for the future. And I want you to think about adding it to your portfolio. So as you think about it, I'll get back to you in a week or two, or however. I'm just speaking out because I don't know how people deal with their wealthy clients, but I'm quite sure it goes something like that, because people didn't get wealthy by just making sporadic decisions, especially about something that they have no information on, or they may have some information, and some of them maybe go ahead and just move quickly and say, yeah, go ahead and add it. Or some of them may just trust their financial advisor. They trust their financial advisor and say, yeah, I trust what you're saying. Go ahead and add 4% of my investment capital to that asset, and go ahead and add it to the portfolio and be done with it. Some people may go from adding 4% to maybe adding 10% or 20%. You don't want to have too much of your portfolio investing in one particular thing. That's just I'm just gonna say that that's not something you want to do, because there could be a great upside, but it also could be a great downside, and you don't want to destroy yourself by doing that. So I think I've talked enough. Yeah, almost a 51 minute video. God damn, bro. 51-minute video of financial bullshit. So I'm about to walk back. So y'all have a great one, and I'll see you when I see you. Peace.